Thank you, Sandra. And now we're going to see our B2B hygiene business that, as you know, it's 26% of the company's sales. And let's start with an introduction video.
We believe in the fundamental importance of hygiene that's good for people and the planet, committed to giving all people equal access to sustainable hygiene when away from home. That's why we see the world in a different way. Where some see napkins, we see an opportunity to provide guests with a cleaner and safer dining experience. When some see soap and sanitizers, we see possibilities to improve hand hygiene compliance for a healthier society. When some see another round of cleaning, we see ways to empower staff for greater well-being. Where some see a bin full of paper waste, we see sustainability efforts to reduce carbon footprint. And when some see dispensers with paper towels, we see equal access to new hygiene standards for all. We use our expertise in sustainable hygiene management to improve businesses and society, creating sustainable hygiene for all.
Well, I hope you like the video. And those of us who work in professional hygiene and in Torque, we like to say that we are in the business of improving business performance for our customers. And here you can see some actually quite good, powerful proof points. 73% of customers who go to a restaurant will never go back to the same restaurant if the washroom is not a good experience for them. 44% of guests in a sports stadium will not buy food and beverage if the washroom is not working efficiently in halftime. So we actually have a big impact in our customer business with Torque. This is our business. 86% is our tissue systems, our tissue solutions like Torque Vision Cleaning that I hope you managed to see over lunch. 11% wiping cleaning, 3% soap sanitizer, and we are having a global presence. This is some of our great end customer accounts. I'm sure you recognize some of the places. And I hope that when you are back after these meetings, when you are in the airport going back home, you will see Torque more in the different places you visit, in hotels, stadiums, museums, universities, hospitals. We are everywhere, actually, and we are the #1 leading brand. As I was saying, a big part of our business is tissue solutions. So here, for example, you see our hand towel system, which is a dispenser that has refills that work with the dispenser. We have a toilet paper system as well, a napkin, express nap for food service industry, and we have actually a technology, a connected dispenser that actually provides data and insights to facility management that is called Torque Vision Cleaning. We have a very strong wiping and cleaning portfolio, mostly working in food service, in industry, for surface, object cleaning. And then we have a soap sanitizer business that is a great complement to our tissue systems in washrooms. So we sell a bundle, a full bundle washroom experience to our customers. But we actually sell across very different segments. And if you think about it, each of these segments has a very different business model. Actually, they have very different KPIs. The way of buying and selling is very different. And one of our key competitive advantage is that we are really good at understanding deeply each of these different segments and providing customized value with our product portfolio. This is super important. Our common denominator is the washroom. We are very strong in the washroom all across the different segments. But outside of the washroom, as I was saying, we have, for example, with Express Nap, a very strong presence in the food service, in the tabletops of restaurants, for example, or in industries outside of the washroom with the wipers that have very customized solutions for that industry. In terms of the trends that we see today in the industry, there are segments that are growing faster, like, for example, commercial and industry. We see high growth in emerging markets. As these markets formalize, industrialize, of course, professional hygiene grows, and we see robust growth in emerging markets. Sustainability is another key topic that we see with our customers, with our distributors, with regulations. That's another key trending, very important topic. And we, same as in B2C, our customers and our distributors expect not only an offline relationship, they also more and more expect an online engagement with Tork. This is a big change also in the industry. We've had a nice long-term journey, and we can now confidently say we have structurally improved the profitability of this business, as Frederick presented before. Comparing to the historical average, now we have a higher margin, while we have been growing in a good way. We also see this short term. As you know, we implemented a restructure where we exited low profitability business, underperforming assets at the same time. But then the underlying part of the business kept growing in a very good way. And this good combination actually allowed to have a good, also short-term, gross margin and EBIT margin improvement for the business. What has been some of these critical success factors in this success journey? A very well-designed, and more importantly, a very well-executed restructuring plan. We are out of that, and we keep growing strategic premium business. We have been investing behind the brand. It's the most important brand in the company, and by investing in the brand, by investing in innovation, as you presented, Thomas, we have more price power in the market. Also internally, we have invested in tools, in systems that allow us to implement price changes in a more agile way, which is very important. Omnichannel flexibility, there is a clear channel shift in this industry, and it creates a threat, but an opportunity at the same time for a leading brand like us to engage more in e-commerce and in different digital aspects of the business. And then emerging markets, for us, it's profitable. So profitably growing emerging markets actually has a very good contribution in our results. We are well positioned to shape the market. Not only are we the #1 global professional hygiene business and brand, we are #1 in Europe, #1 in Latin America, and a very strong #2 player in North America. Strategic system is the focus of our strategy. Our strategic systems, as Thomas presented, is where we have clear product superiority, where we have a competitive advantage, where we have patents, where we have a very clear value proposition for our customers, and a good value creation for Essity, of course. This strategic system now represents more than 60% of the sales, and we have been growing, as you can see, in a very good way in the past, and our ambition is to grow twice the market with these great products and systems. How do we do this? A key pillar is innovation, and here you can see a couple of examples. Thomas, you presented one very good innovation. This is PickServe, our high-traffic dispenser that has been super successful, as you can see, and creates very unique value in high-traffic areas like stadiums, airports. Perhaps the next time in an airport you will see one of these nice PickServe dispensers. An Express Snap that has been 20 years running, and we keep innovating on top of this fantastic franchise, and it's the world's favorite napkin dispenser. We are also expanding for more. Wipers, soap sanitizer is a smaller part of the business, but we are over-investing in the different resources because we think we have the right to continue growing also faster than the market in this very important part of professional hygiene segments. And then, of course, Tork Vision Cleaning. By creating data insights with digitally connected dispensers, we have actually now half of the top 10 airports in the world, half of the top 10 airports in the world have Torque Vision cleaning and are providing today insights to facility management companies that take care of the washrooms in the airports. And it reduces up to 20% the workload. So imagine for a facility management that labor is a big part in their P&L, reducing 20% of the workload for them. This is very powerful, and this speaks about the benefits of digital integration in our business. As I said, we are number one in Europe, and we will continue growing faster than the market in Europe, leveraging our cross-European scale, upselling and cross-selling with existing customers, but there's also some segments like industry where we will continue to expand and grow in a successful way in Europe. And then for North America, I will let the expert, Matt, to talk about this fantastic geography.
Thank you, Pablo. I'm really glad to be here and to spend a few moments on North America. Two areas of focus. One, what have we been working on to create a much more profitable outcome? And two, where is our ultimate focus every single day? So when you walk away from here, that's what you'll know is our focus. As Pablo mentioned, we work in a very large market in North America, around 6 billion euro, of which we are growing, the market's growing 1% to 2%, and we have a firm 24% share in that space. And as you saw by the earlier graph, this represents about 43% of professional hygiene overall. So as we came through COVID, and we started having a good, strong recovery in our business, as we were doing our 2023 planning, we had tremendous confidence in our ability to create the highest revenue we've ever had in North America. And it was in that moment, once all those things have settled down with things like inflation and supply chain pressure, we took a very deliberate review, a very purposeful review of our portfolio. Where are we making our money? Which systems, which customers, which contracts? What machines provide that value? So looking at our lowest profitable business against our lowest performing asset, we looked at that in that greater level of detail, and we saw opportunity. Opportunity that we simply couldn't fix further by just raising the price, but ultimately some structural changes that we needed to make. So we did a restructuring, as Pablo indicated, with our asset base. At the same time as we did that restructuring, preserving some of the best assets that we had in the facility, we started looking at those contracts and ultimately which contracts are not performing. With marketing, we look at life cycle management, which products have exceeded their lifetime and don't have that same oomph that they used to, and which customers truly value what we bring at Essity with torque, with innovation, and our people. So we made some choices on that portfolio to really and ultimately strengthen that business as we match those two. In that time, we never lost focus of where we create value. That is on our strategic products, our strategic systems that we drive. If you had an opportunity to go to the Torque Showcase, you would see some of the innovation. The picture here in the backdrop, this is actually the Tesla Gigafactory in Nevada. They have leveraged our capability within Torque Vision cleaning, our digital capability for cleaning, and ultimately Peak Serve. This is a great advantage to us because these are our profitable products, but it's great advantage to them as they're focusing on operational efficiency every single day, and they have very, very strong sustainability goals, of which our offering and our capability fit right into. So that strategic focus is there, and at the same time, we partner very, very closely with Thomas and his team relative to continuing to build our brand and our brand awareness in North America. And in some respects, we're a little bit newer to the family, although it's been over 30 years. Ultimately, continue to make sure that brand is top of mind every single day is a very, very big thing for us. So when you look at the next slide, you look at the momentum of these strategic systems over the last 4 years. Overall, that has been growth of 65%. These are absolute numbers, not a CAGR in that time, but tremendous improvement within the strategic systems. And I'll point back to 2 systems that Pablo mentioned. In this same time frame, after Peak Serve launched in 2019, from 2020 to 2023, it grew over 400% in absolute terms. And ultimately, a franchise like ExpressNap, 1 out of every 2 napkins in North America comes from us. That same franchise grew over 75% over that relative period. So ultimately, that's where our focus is, Pablo, and thank you for sharing a few moments with me.
Thank you, Matt. Now we continue with the emerging markets, and as I said, our emerging market position is profitable, and we want to actually double the sales in the next 5 years. We are the #1 professional hygiene brand in Latin America, which is very powerful. We are also expanding in a very choiceful way in Middle East, India, and Africa, and of course, leveraging our global know-how, our global portfolio into this high growth opportunity for us. So we will double the sales in the next 5 years in emerging markets. Sustainability is another key topic in our commercial discussions with our distributors and customers. We focus, of course, on materials and packaging, the carbon footprint that we work with Donato on the factories, and very importantly, most of our systems actually provide a saving use that delivers a positive sustainability impact for our customers and for our distributors. So we have a great sustainability story when we engage with distributors and customers. I was also mentioning the big channel shift that is happening in this industry towards digital. So B2C is not the only one. Also in B2B, there is a big shift, and we are investing heavily to win in this. And one great example is our partnership with Amazon in North America, Matt.
Yes.
And Amazon has explicitly disclosed that they want to grow and win in B2B as well. And then they picked leading brands, including Tork, to partner with. And we have been having a tremendous growth journey, learning together with them. And actually here you can see an actual and real demonstration of how our Tork webpage or web shop looks like within Amazon. It looks like very B2C kind of experience, but it's actually a B2B. So buyers expect to buy now in the same way they buy B2C and B2B, and this is a good seamless way of buying for our customers with Amazon. This is our growth model. We want to grow more than 2%, as Sahil presented before. But how we grow, perhaps in this category, is more important because we want to grow with our strategic differentiated products, as Magnus mentioned also before, growing twice the market there. And then we expand and grow fast also with wiper and cleaning, with soap sanitizer, and then, of course, doubling the size of our business in emerging markets in the next 5 years, which is a great, great ambition. So finally, we will continue strengthening our global #1 position. We will continue growing with our strategic systems, wipers, soap sanitizers, continue together with Thomas innovating, creating product superiority. We are very passionate about this. Win in omnichannel with this big channel shift that is happening in B2B. And then, of course, continue growing and accelerating in emerging markets. So that's it for professional hygiene, Sandra.
You want to go?
What a team.
The chairs challenge.
Chairs challenge.
Okay, perfect. Patrick, I promised you to have the first question. I was like, so question over here.
Hi, Patrick Follen from Barclays. Just on the tissue segment, going back to that, it was quite interesting talking about moist tissues. I was just hoping to get a bit of color on maybe what the raw material basket, does that differ versus the rest of the tissue portfolio? Second of all, maybe what a good performance in 5 to 6 years of moist tissues look like, or what is the representation of the tissue portfolio would be like good progress? And then maybe lastly, just the profitability of that segment. I know it's relatively new, but over the last 4 years, you've had very good growth. So 3 questions: raw material basket, growth aspirations, and profitability.
The raw material basis is a substrate close to a non-woven. So this is nothing we are producing ourselves. It's basically an outsourced. We do not have, let's say, market share targets or growth, but our ambition is to continue to grow double-digit every year, what we are doing at the moment, and this is also how we believe it. We are not commenting on the profitability of the segment, but it's definitely a significantly higher gross profit margin, and we are also relatively over-investing in A&P. EBITDA is better than the rest of the business.
And what's the sales in 4 years?
In 4 years, you take what we do today, what we are not allowed to talk about, and then we plus 10%, plus 10%, plus... Now he's good.
Now I asked.
This is my target setting now. You have seen it, huh? It's really the growth is enormous, the market growth. We are only with a brand there, and we have very strong market position, and we expand them every year. So, I mean, I don't want to say the sky is the limit, but it's a fantastic business.
And what markets have you rolled out the product in? And
we are in Germany, UK, France, Italy, Netherlands, more or less in all our core European tissue markets.
all right, got it. Thank you.
Good. Molly, please, then you can just pass on, Patrick, the microphone there.
Thank you. I was struck that consumer goods seems to play a bigger role in your core and particularly the more strategy for growth. How do you balance that against the positive mix you have as a building block in your EBITDA bridge?
I'll start, Fredrik. And yeah, the reason is because, of course, it's a bigger part of the overall business, so the base is higher. Most of the growth should come from the higher margin segments within consumer goods. So incontinence care, retail, and feminine care. Actually, baby care is also now enjoying really good margins. So that's how we aim to combine kind of the growth with the margin development. And I think there was also a bit showing that we're not expecting to grow much in consumer tissue going forward. However, of course, in the margin bridge, it's not only the mix. I mean, that was only one of the 3 or 4 boxes. The others were very much, of course, efficiency, where we see a lot of efficiency in cost of goods sold in consumer tissue also. And then, of course, the operating leverage also.
Okay. Charles, yes.
Hi, 2 questions from me. First, probably for you, Fredrik. Obviously, today you've given us a lot of numbers on growth by division. I see you refrain from giving us margin targets by division. But if I obviously listen to all the presentations, and thank you for those, there's a clear message that there's margin upside to different degrees, but in each of the 3 divisions. So I guess when I look at where you were 9 months, sort of 14-ish% EBITDA margin, 15 doesn't look that far off if everyone's going to contribute to margin expansion. So is it fair to say that 15 is the target and then not the ceiling in terms of margin for this business? That's the first question. And second question, just shifting slightly on M&A, but it may also be for you, Fredrik. In the past, you've talked about, M&A opportunities, but equally, given where the Essity share price was, the value was sort of buying back shares, and obviously you've bought back shares. Does that still hold in I guess, medical solutions typically hire multiple businesses? Is it difficult to justify that where the current multiple is on Essity, or has that changed? Thank you.
Yeah, maybe I can answer the last question first, Charles. Obviously, with our valuation, if you just look at the EBITDA multiple, it's quite low, we think. And so obviously the targets we tend to look at are typically higher valued in terms of multiples. So what we have clearly stated is when we buy companies, we don't rely on a revaluation of the Essity share post acquisition. It's rather so that we need to bridge that gap with synergies that we have. And of course, that limits the spectrum or limits the number of potential targets a bit. But we believe that there are such targets. And so if you take the example here of health and medical, then clearly there are examples where we believe that the synergies are so strong that it may compensate or would compensate that gap in the different, in the multiples, basically. So the first question was? Yeah, no, and so I already alluded to it actually, because if you look at where we are, you're right, it's not very far from 15. Let me just first say one thing. The target is more than 15, obviously, so just to be perfectly clear on that. And there are scenarios where we could actually expand margins higher than 15%, but we don't believe that we could do that with the aspiration that we have for growth. So it's a combination you've got to look at. You've got to look at the more than 3% of organic sales growth and, of course, the margin target of more than 15%. So in theory, I think what we are saying with the return we now have, the return on our capital that we generate, growth is incredibly profitable. So, of course, it is a priority for us to grow, perhaps a bigger priority in the short term, rather than to expand the margin. Maybe just to remind, I mean, we've set several targets in the past. We've reached all of them. And this is now the targets that we are working towards. We think it's a really a value-creating journey. But, of course, we always aspire to do better. But the combination, we think, brings significant shareholder value.
Perfect. Niklas, yes.
Thank you. Niklas from Carnegie. Not sure exactly who this question is for, but when you talk about growth of at least 3%, and we look historically, and you've delivered 3% organic growth with Vinda, now you're going to do it without Vinda. Can you just clarify that? Because you mentioned that this is supposed to be driven by volume and mix, not price. But I mean, even historically, there has been a price element, even before the superinflation period. So can you just help clarify, is it only volume and mix that's going to drive the 3%, or are you just talking about normal inflation rate, just to clarify?
Yeah, just to clarify, it's excluding price because, of course, there's some price component in mix, but we call it, you know, higher prices due to mix, then that's part of the 1% mix. And then pricing is just to compensate inflation going forward. So that's how it should be interpreted.
Okay.
Yeah.
Yeah, clear. Thank you. While I have the mic, can I ask a second question? You mentioned before that you have closed a dozen plants in the last, I don't remember the time frame for that, and now you're down to 72 plants. Sorry, the time frame was?
10 years.
10 years.
Yeah.
Where do you see that the next 5 to 10 years? Are you happy at where you are, or do you see a continued path of optimization?
Already beginning of this year, we clearly stated that the time of major restructuring is over. Some of you remember that 10 years ago we started the big tissue roadmap program, and we actually said this would knock off 2% of top line growth every year because we were closing down operations and discontinuing businesses. And then that over time became lower. The last big restructuring effort was in Professional Hygiene, as Pablo has spoken about. Of course, going forward, we will probably, now and then close a plant, but also maybe now and then also buy or establish a new facility somewhere, but not in the kind of rather aggressive restructuring mode that we have seen over the last 10 years. Now it will be more business as usual going forward.
Thank you.
Oscar, you have a question here.
Thank you. You've talked a little bit about some of the geographic, not white spots, but areas you'd like to grow in, which are sort of adjacent to your business. Do you also see product categories or segments which are adjacent to your business, but where you're not present today, that you'd like to grow in a similar fashion to the way that you grew into wound care quite a few number of years ago now, but still?
Sahil, you want to? You should ask the other guys now. We answer questions. So I'll stop answering questions.
Yeah. So as you've seen in the plans, we at the moment believe that when it comes to expanding into more, we believe that the adjacent categories that we have picked there, like for example absorbent apparel, and also the Inco Men segment, particularly in Inco, will give us enough to do and also provide us with enough profitable growth for the time to come. This is not to say that we don't explore also additional consumer goods categories that are in the vicinity, let's say, of where we play, because of course if you're holding number 1 and number 2 market positions in many of the places where you play, you're also looking into expanding into additional categories. But there's nothing that we can disclose on this as it stands today. But you can think about that as explore for now.
Super, thank you.
Any more questions from the back? I think I missed a question earlier. Yes, please.
Thank you. Could you touch a little bit more on how branded, private label, and contract manufacturing factor into the overall strategy? We haven't heard a lot of specifics on that. Could you give a little bit more color on how those 3 components factor into the overall growth strategy that Essity has presented today?
Yeah, so contract manufacturing, so basically outsourcing the production, we only do in a few instances. And I guess the biggest share of that we see in the medical space. So maybe, Ulrika, you want to talk to that. And then in leak-proof apparel or the washable underwear that we don't make ourselves, that we buy. And the substrates like the wet wipes, we convert them, but we don't make them ourselves. But I think the biggest part is in medical, Ulrika.
Yeah, this is true. We do some contract manufacturing in medical. As we talked about, both myself and Anand, we have some really superior technologies that actually can be used beyond the products that we produce today. So we do have some contract manufacturing where we offer that, of course, then in areas that are not competitive to us. This is a small part of our business and a small part of the growth. This is not where we have the biggest growth aspirations, obviously, but it's a good scale benefit that we get from that, so we will continue to do it on that basis.
But then we also had in our bus here during the tour the discussion about brand versus private label, because there was, you could see the toilet tissue that was produced for Mercadona here in the plant, also our own brand Cologar and also Tork. And just to make that distinction clear again for everyone, basically, when it comes to, and this relates then mostly or only to consumer goods, we actually have 3 types of customers. We have the normal retailers that buy our brands, basically, and that's where we put much of our effort. And then we have the pure hard discounters that only buy a basic product according to the specification at the lowest price, and that's what we call private label. And this part of the business, which is then all in consumer tissue, we have separated out in a completely freestanding entity that we call the Consumer Tissue Private Label Division Europe. So it's a long name, but that's running completely separately. But then actually we also have a handful of contracts with retailers that we worked with for decades, where we worked very, very closely together to develop both their brands and our brands in some cases. And the biggest is actually Mercadona. So we have developed together with them for 30 years. We typically say, we met them in Valencia last week, Volker, that we're married for life with them, and we invest together, and it's a very healthy business for us and for them and for the consumer, so it works very well, and we call that retailer brand. It's a handful of customers in Europe.
Could mention DM, for example.
DM in Germany, Kruidvat in Holland, or 2 other examples.
So if I read from that correctly, there's no reason for Essity to be afraid for the improved or the continued growth in the prevalence of private labels in the US, for example, because you're also playing in that area.
We're not playing in tissue whatsoever in the US, in consumer tissue, and no, and we have a good plan now for TENA, which is our kind of big retail effort in the US, as you heard from Andres.
Okay, and if I may finish off with one last question. We've seen a lot of healthy pricing power in two of the segments, a little bit less in the consumer goods segment. Are you looking at the long-term ability to price in consumer goods and maybe increase margins that way?
That's for Andres and Folke.
Must be Andres, no?
Why not Andres?
No, our strategy is basically trying to follow prices in parallel with the cost inflation, but our strategy is based basically on mix improvement. So basically, we are not betting right now in terms of pricing because nowadays there is not much room to increase prices. But of course, once we need to react, we will move accordingly.
Can I add there?
It's a long way.
Yeah, and I guess I think it's just to be clear, I think we have an extreme pricing power also in consumer goods, actually, because we have proven over and over again that we have always been able to compensate cost inflation, always. We have done this for at least the way we've looked for the last 30 years. And I think we demonstrated it super well during hyperinflation. We fully compensated. So you may feel that pricing power is slightly lower. I don't think it is, actually. It's as strong there. It's just a matter of timing. That's kind of the essence of it.
Perfect. And that concludes our Q&A. And we will now leave the floor to you, Magnus, to summarize the day. Yes.
Okay, thanks everyone. Our dream team, a winning team on stage. So to conclude very quickly, the objectives that we had today, and I hope they align with your objectives, was to give deeper insights into Essity, our people, our culture, our assets, also give a deeper insight into how we will achieve our new financial targets, the 15% and the 3%, and also, of course, what we will do with all that cash that we're generating, which is, again, a very, very positive situation. So I hope that they have been fulfilled. From my own perspective, I hope that you can use the different waterfalls that you've seen from all the different business units, also from Sahil on growth, and from Fredrik, you have the growth one here, and see how we aim to add up to 15% and to 3%. So I won't go through that again, and we had some discussions and questions about it as well. I hope that you perceived what I could see when going through the plant tour, which was the highlight for sure for today, of course, together with everyone's presentations and discussions. But what makes me really excited and very, very positive about the future, and actually very, very proud, is to enter a production facility like this. It's clean, it's silent, the machines are running, it's very empty, you know. It seems to be all aligned. You move forward to the machines, you see all the digitalizations, the screens, how things, you know, are now having with automatic feedback loops that we discussed and so on. The machines are self-aligning. We get information beforehand when maintenance needs to be done and so on and so forth. So really impressive. And since I've been coming back here for 12, 13 years, I really, really see the change, and it's massive. But that was kind of 20% of what made me very happy. What really excites me are the fantastic colleagues and employees that I hope you also experienced. The drive, the enthusiasm, the energy, the knowledge that they have, and their ambition, and that, you know, they don't settle for what you buy off the shelf when it comes to digital support or so on. We develop ourselves, we do our own algorithms, we develop our own models to run machines better, more efficient, and safer than anybody else. And to listen to these process engineers that started as graduate engineers, work their way up, how enthusiastic they are, how they then are able to convince people from other very attractive industries to come to us because we're at the forefront. That was the highlight of my day. So I'd like to leave on that note and hope that you leave with the same impression, actually. So thank you very, very much again for coming. It's been really enjoyable. I think we covered a lot of ground already last night and then throughout the day. And of course, just keep on shooting your questions or reflections or advice for that matter. We always aim to improve and do better throughout the rest of the day here. So thank you very much.
I just want to reiterate what Magnus said. Thank you very much for your interest in Essity, for coming here to Vals, for all your questions and discussions. And now the buses are leaving no later than 3 o'clock. Make sure that you get on the bus where your luggage is. And I hope that you have enjoyed this day. Yes, yes, both buses are going to the airport. So thanks for today and safe travels back.
Thank you.